And shifting focus then, let's also put the spotlight on edible oil market then, and this is because GST on edible oil has now been cut to 5% from 10% earlier. What does this mean for the industry? To discuss this, we are now joined by Angshu Mallick, CEO at Adani Wilmar. Mr. Mallick, good afternoon and thank you so much for joining us here on ET Now. So now the GST on edible oil has been slashed to 5%. If you can tell us, what does this mean for demand and for volume growth for the industry and for Adani Wilmar in particular?
The GST bonanza is surely a great thing for the everybody in the country, but middle class, I would say more. Now, edible oil has always been taxed at 5% GST, so we have not seen any change on the GST front, except that margarine was taxed at 18%, and margarine is made out of vegetable oil, and this is one product where the dairy industry, even in the ice cream industry and bakery industry is using margarine, and they were finding it difficult at 18%. Now it is 5%, and I'm sure margarine will now be competitive like edible oil or like ghee. That is one. And two is that we are also in the processed food business where soya nuggets or jams, jellies, and all that we manufacture. Everything was at 12%, which is now at 5%. So overall, processed food industry will get a big boost, and surely it's a big help and a relief in terms of reducing the rates. And for us, staples, we have not seen any change. I thought possibly branded atta, suji and dal will be exempted from tax, but it has not happened. But anyway, overall a good situation.
Okay, good situation. And since you're talking about some other categories in soya chunks in particular, soya bari, if you can tell us, the rate on that has also been reduced, I believe. What kind of benefit then will this have on Adani Wilmar in particular?
See, it was 12%. Let me tell you, plant protein has been in demand ever since we have seen COVID, and doctors have been recommending to take increase your protein intake. Plant protein is a soya-based protein, is our soya nuggets, and there has been exceptional good demand for this product. But at 12%, it was becoming somewhere a hindrance. Now that it will be 5%, I'm sure the benefit will go to the consumers and especially to the vegetarian people who wanted always a good source of protein. This will help in increasing the business. It is also good for soya bean industry because the soya farmers were not getting a good price for their bean. But this reduction will support the soya farmers because they have been growing the bean, and we all are selling soya flour, soya nuggets, soya sauce meal. All this will have the benefit.
Okay, and if you can put that into perspective for us, into numbers for us, I understand it is likely to be a positive. But from a demand perspective, since you are saying that it is a positive for the entire industry in terms of volume, will rural demand benefit more versus the urban demand? And how much volume growth will the industry see solely on account of this move that the government has taken?
See, the rural demand will increase because the tax benefit will also go to entire rural as well as urban. Now, the cost at the rural will surely get that benefit. But overall, if you ask me, edible oil remains same because that has been 5%. Margarine was almost very, very small. That will now get back into action. Soya nuggets is actually 100,000 tons market in India and growing at around 15 to 18% per annum. And there I see a great opportunity because the demand will be much higher and with reduced taxes.
Yeah, I understand. And we get that point that rural economy is expected to benefit. Mr. Mallick, thank you so much for taking your time out and joining us here on ET Now and helping us understand how the edible oil market and especially soya chunks and several other categories in particular are likely to benefit. Mr. Mallick, thank you so much